We have a great guest today, Mark Wolgin, and Mark and I are going to talk, or more of Mark sharing his story of what appeared to be at the end to be a Ponzi scheme. So, Mark, why don't we start out with you sharing with our listeners a little bit about your background, your story, and how you got into real estate in the first place?
Oh, sure. And thanks for having me. I am 60, so I don't know how that compares with your other people who listen, but I got into real estate in like 1996 when I met some friends and they were investing in single family homes and they were looking at all the things that are benefits, of which I'm sure all your listeners know, the appreciation, depreciation, the leverage and all that stuff. And I wound up getting involved with bought two houses and wound up paying them off, and then did 1031 and got some other houses. All this was remote. And anyway, career-wise, I wound up in San Diego. This is in about 2000. And I remember thinking San Diego is a nice place to live. And oh, by the way, I'm a doctor, and San Diego is not a place that pays a lot. So I remember I wound up in a bookstore, and there was a book by David Finkel and Peter Conti, How to Make Money in Real Estate Without Tenants, Toilets, or Termites, or whatever. And basically, it was like some technique thing. And so I wound up through that going to real estate meetings, and what's going to lead to, I guess, the gist of this is I wound up meeting a guy who would be what you call a sponsor, although this was my first entry into passive investing. And it turned, I'll detail more, but it turned out not to be great.
Got it. So how did you meet the sponsor, and how did the relationship get developed with him? Like, how long did it take? What did he share? And what kind of communications have gone between the two of you?
Well, I guess it's really like being in a different world. So my whole life, I'm going to hospitals, seeing patients, trying not to cut the nerve, all the stuff that you do as a doctor, and, not get in trouble. But all the reasons that real estate made sense was gathering my interest. So I went to a lot of these meetings, and I'd meet like plumbing contractors and finance people, and I was like the fish out of water. But I wound up getting this when podcasts were getting bigger. And so just as I left in 05, 06 to come to my current job in Albany, Georgia, I wound up getting hooked up to the San Diego meeting. And there was a guy there, and he was talking about all the things that I'm sure your listeners know about value add passive investing, where you buy a building, and he was working in C-level apartments. And, he went through all the calculations of having a rent amount, rent amount that's a certain amount, and then you increase the rents through improving, and it all makes sense. The only thing that obviously people who are less than honest don't say is that they're less than honest. I don't know if he started out that way, but the whole idea made sense. So I moved to a new job in 2006 in Albany, Georgia, and I was making more money, and I had something to do with it, and I needed something to do with it. And so I wound up investing in one of his apartment deals. And, the first one, he said they had a hiccup, and so they're putting the money in another one. I thought, okay, fine. I operate, and this is what you do. And I didn't really think much of it. But so, deal number one comes, and I'm making returns, and it's just like he said. And so I think a big part of the dynamic is the relationship. So, I mean, you could fill in the details about all of how someone would present an opportunity to invest, and the more the person makes sense, the more they answer your phone calls, the more they have answers for everything, and then you start seeing your money come back. It builds a relationship. So, I mean, that's sort of what was the base of it.
Sure. So let's step back a little bit. So you met him while you were still in California, and at that time you already had some real estate investing experience, not necessarily in syndications, It sounds like you were doing single family houses at that time, flipping or buy and hold.
It was buy and hold. And the attraction of it was that it was a certain return and I didn't have to do anything. And so I was familiar with the issues of, leveraging and depreciation and, trying to resell and that it's illiquid, and costs of turnover and rehabbing places. Those weren't foreign to me, but, and I actually didn't meet him until later, but I heard about him on a podcast. And what's very common, it's probably almost all of my sponsors that I work with, I've never shaken their hand. And it's not a COVID thing, not even bumped elbows, I mean, the whole thing is remote relationships. Even the houses that I bought all along the way, like every property manager, I've never met one of them. So that whole part made sense, and the communications were fine, and everyone emails, and anyway, so I just had a confidence going forward that this is how business was done.
Sure, but going back to where you were, so you were buying houses and they were managed by single family houses. They were managed by the property management companies. So what triggered your decision to switch or maybe add apartment syndications to your portfolio? Did you decide to completely switch, or you just wanted to add something other than single families to your investment portfolio?
It was more to add other things. Probably a little greed. I mean, because, you can't really scale single family homes. You can dial in to a degree. I mean, whatever the market will bear, right? You can kind of dial in the value. Like if you're making 100 grand net operating income and the building is $1 million and you increase it to 200 grand, whatever the factor of the cap rate is, you do the calculation and you can kind of leverage up the value. And so that was the attraction. It's just, it was being a little more aggressive to get ahead financially.
Yeah, no, it makes total sense. And that's a typical progression for a lot of people that start with residential real estate and then gradually switch to commercial in either active or passive role, depending on their priorities and interests in life. So yeah, that's very, very natural. And so this guy, you heard him on a podcast and then he came to the meetup and you actually have seen him in person, right? At the
Yeah, no, I never met him until things were going bad, which is later in the story. But like with actually, it's even like how I met you. I heard you on a podcast and I called you up and we have a conversation, right?
Yeah.
And so that's sort of how it went. And it made sense. And you put a toe in the water, then you put your foot in the water, and then it's a quicksand pool, and you're on a podcast like this explaining how not to do it.
Exactly. And sharing your experience with others to make sure that other people don't get into similar situation, hopefully. And we're grateful for you sharing your story, Mark. So help me understand, when you met this individual virtually, did you do any kind of due diligence? Did you have a conversation with him or anyone who maybe invested with him in the past?
Well, I have the advantage of hindsight, and I did what I thought was due diligence at the time. I got some references, I talked to 3 people. They all said, yeah, he's a good guy. He's a West Point graduate, verified, fine,
Wow.
and a licensed mortgage broker in the state of California, verified. Okay, I didn't know what else to do. I mean, I certainly wasn't oriented to, market conditions and choosing places. He was working in San Diego, in a place like buying 24 unit buildings. This is not like big deals, but and then the other thing was that I guess I didn't really know the details of like getting background checks on people. It was like before 9/11, you would never think of jet airplanes as a bomb. Like I just fail your imagination that people could become how he became. And the other thing, which either makes me and my kindred doctors like great targets, is that we have a default to believe people. I mean, it'd be different if I was a police detective and had to like sift through everyone lying to me all the time. But like when the person says, my dog ate my hydrocodone, I'm like, all right, I'll let it get by this time, but you can't do this again. And so I tended to believe people, and I kind of give them the benefit of the doubt.
Sure. No, I hear you. And I think that you've done enough due diligence, because if he's a West Point grad, then West Point did the background check on him. I'm sure he wouldn't have been able to go to that school in the first place if his background wasn't clear. So that's definitely speaks volume. Plus the references, people that have worked with him in the past, and they all gave positive feedback to you. So that also is due diligence on him. So you've done your due diligence, and the first deal was going well, right?
Yeah.
And was it a long-term buy and hold, or was it a short-term, more or less like a year or two flip?
Um, well, the whole interaction with the guy was over kind of about 3 years, 3 to 4 years. And what happened is, I would be getting returns. So he's building credibility. And of course, I get my phone calls returned because, I'm a good investor. And, each deal I considered an independent thing. So, like, just say deal number one, it's kind of going okay. Then we get into, I say, I'm going to invest more. I go into deal number two, and maybe and I don't remember which is which, but one might have had a hiccup, like distributions dropped off, and he said, and this was not great areas, it was like places that probably you or I wouldn't be that comfortable going at night, but he was trying to build them up. Like he said, a gang member moved in and scared a lot of the residents. So, I mean, that kind of explains having no distributions for a few months, or something like that. But there would be these hiccups, and it just, if they were, I compartmentalize it. So if there was one that had a problem and the other was still performing, I would give them the benefit of the doubt.
Sure, and that's totally possible, especially if it's not such a nice area and there are potential hiccups. But he was still communicating with you during that 3-year period while you were investing, and he was building his credibility.
Yeah, and I don't know how much really, if my loss is 100% on him. Not that I'm excusing his dastardly behavior, but just in my spirit of trying to help, like, at one point, one of the buildings, because it's probably the same one with his gang thing, was having cash flow problems, and he was getting behind on the property taxes, and but he had a plan, and he was going to get the rehab done. And like there was one unit he found that a guy had an extension cord and he was not paying rent. And just like he's get the cops in there and clean it out. It just sort of made sense. And so I even volunteered to like loan more money. It just bristles to say it, to pay the taxes. And I would have a loan against the building and they would pay me back at a agreed interest rate. And, I'm sure he's just was loving it. But, the thing is, like, I don't know where along the line, I'm going to jump ahead for a second. I don't know where along the line, either if he was always a sociopath or his house of cards started to crumble or what. But and just to spoiler a little bit, when we got to the lawsuit, there was like 43 people that he bilked out of over $8 million. And there were people that were Iraq war veterans and a lady with cancer and retired people who he, told to put all his money with them. And, even high school friends. So at some point we were in the mediation meeting, and, this retired judge is saying, don't expect to get what you want. Everyone's kind of come away unhappy. And so there's like 20 people in this room and they all want blood, and, it just, the key thing, kind of get to the spoiler again, is like, what would you do different? And I don't know how he got to how he did. I mean, I did whatever I could, and probably the no good deed goes unpunished was part of the scenario of how I got more burned, but I mean, it was an expensive lesson. So anyway, I sort of jumped ahead, maybe messed up your train of thought there.
Yeah, no, but yeah, that's fine, and every little bit definitely helps. So let's go back to this 3-year period. So you've invested in 2 properties, and one is performing, the other one is having hiccups. And what's kind of happening? Have you invested in another one with him or multiple until you
Well,
start?
there was a total of four,
Okay,
and I think I think the number three was one that we wound up getting some money back because they sold some of the line between the street and the apartment. They sold it as an easement to the city, and so we got got a little more money back, and those things just added up to that this might be a decent deal, and stuff like that. I don't. This was like 2011, so I didn't really go back to refresh my brain on all the details. But I just remember at one point I just kind of shot up in bed one night and I just thought he's lying, and everything fit into place. It was like that one click that the puzzle fits together, and it actually happened around the time that there was another investor who somehow found me, and um, that was the sort of beginning of the end because I had no reason to talk to other investors. I never even asked. But when this guy found me and we connected with some other ones, um, and we wound up having to find lawyers, and it was I don't know exactly what was that crystallizing thing that happened, but it was like a sum of like evasive answers that were happening. Like one of the units, like I think in building number 4, he said, well, this unit could not be rented because it has a $14,000 cost plumbing problem. And at some point when we got with the other investors, we fired him as property manager because he was the operator and property manager, which is not that unusual. But so we got a new property manager, and the guy had a handyman run a snake down the toilet, and for $50, he made it a rentable unit. And so it just opened up Pandora's box of the imagination. Like, what else is he stealing or whatever, So um, anyway.
how did you get him removed as a property manager? If he is the GP in the syndication, he is the only one, unless he has partners, other GP partners, he's the only one who has the rights to make those decisions. So was an attorney involved at that time?
Um, I think I don't remember getting attorney involved then, but I think it was the investors just said, we own more of this. We're firing you. We're getting someone else. And maybe he knew the jig was up in a way. He didn't really argue. He said, okay, so it wasn't a big fight. He just wanted us to be happy. I think he was trying to assuage the coming storm.
Sure. But going back to the red flags, was the first red flag that vision that you had that he's lying, or did you see any other kind of small red flags prior to that?
Well, I think in hindsight, the things about like the gang member, I mean, that should have been cleaned up in a month. It shouldn't have taken 4 to 5 months. I mean, just things like that. You get the cops in there, hire some guy named Bruno, whatever it takes. I mean, just go in and, get it done. That's what his job is. And I think, I was busy doing what I was doing. I didn't know anyone else who was in this investment. And I guess I should have more details. I don't, in terms of like other red flags. But one thing that came up is like when we started connecting with investors with each other, one guy drove by and the place looked terrible. I mean, it was ungrown, unkempt weeds in the front. And, it clearly wasn't a priority for the guy. Um, Also, in hindsight, I wound up being the one who paid for all the legal fees. And he would be in a video deposition basically saying any investor money I considered mine, meaning his. And so he would he had a nice office in an expensive building in San Diego. And he bought cars and like went on trips to Las Vegas. And so somewhere along the line, he went from someone who went through the honor roll at West Point to just not a normal person.
That's incredible. And he was on the honor roll at West Point?
No, I mean, you have, like you were mentioning, you have to have a certain degree of honor. to
Sure.
get through West Point, you
Yeah,
know.
that's right. And I mean, it's really hard to get into that school in the first place. So, wow, that's definitely incredible. And so, from that point on, when you realized that he was lying, that's when another investor connected with you, and you got more investors talking to each other, and you started kind of trying to see what really is going on with the property or multiple properties, and how you can change what's been going on. Is that correct?
Yeah, I don't remember exactly the sequence of events, but you know, first it was investors talking to each other, and then the pieces not fitting together, and then the drive-by that the place looks terrible. Then we're talking to lawyers, and at one point, I mean, it was fairly civil. He was like, "Well, listen, I have E&O insurance, so have your lawyer call my insurance company. Let's get this settled." You know, he was kind of trying to help, but you know, it's pretty crappy when he's like admitting that like I've defrauded all of you people, you know, or something like that, you know. And really, that's not what E&O insurance is for. You can't like, I'm going to go do a crime and let my insurance pay for it. And I can elaborate on that more, but it's crazy to have someone thinking that way.
Yeah, yeah. So in hindsight, I think you mentioned a couple of points that are really good and could serve as a red flag if the operator is mentioning the property is not performing, and the property maybe not in the best of the neighborhoods, but cleaning it up takes much longer than a couple of months, then that potentially is a red flag and something to look into. Why is it taking longer than 2 or 3 months to clean it up? Where's the police in this? Where's the property management? Uh, where's the operator themselves? Are they doing what they're supposed to do to clean it up? So those things are definitely can serve as indicators that there could potentially be something fishy that needs to be checked out. And I'm glad that you mentioned that one of the investors took it upon himself and drove by and saw how bad of a condition was the property. And so that probably was, the additional trigger that made everyone realize that illegal help was needed in this case, and you needed to bring this into the court of law and take him on this.
Well, I live 2,800 miles away, so it was not really conducive for me. But I wound up having an orthopedic meeting in San Diego, and I went by and met him, and it was very strained. I mean, he was like chain smoking and having a nervous laughter or something like that, and he hadn't really totally confessed at that point, but it was just very awkward. And you know, so um, you know, when it actually came to the legal part, um, you know, several lessons. And this doesn't help people who are trying to avoid this situation. I'm saying, like, if you get down the road, this is a reason not to go down this road, is that the lawyers really, they screw their clients. I mean, like, I called this guy I know who's in a corporate situation. I said, give me the name of your bulldoggiest bulldog, teeth in their leg lawyer. And he gave me the name of this guy who was a bulldog at billing. So, I mean, like, I would see on my bill a charge for 10 minutes for a phone call. And I made a note on that day. He called me to tell me he can't talk to me and then billed me for it. So, like, I had to go to New York at one point for a deposition because the insurance company was in New York. And the guy had the audacity to say, "Oh, come by the hotel, I'll buy you breakfast." You'll buy me breakfast? I'm buying us both breakfast. And
Okay.
like, he's staying at a Hampton Inn. I stayed at an Airbnb that I couldn't even stand up in. I would like hit my head on the ceiling or something like that, you know, just to try and save a few bucks. And, you know, so that was one thing about them. But we wound up getting caught in this situation where he had this errors and omission insurance, and it was what's called a wasting policy. So like every dollar they spent on defense was that much less that would be available for some settlement. And we also had a criminal complaint. And I don't know if it's good or bad to do that, but you know, I kind of thought, A, he's a criminal, and B, it'd be some sort of leverage. But this was in like 2008, 2009 in San Diego, and there were so many frauds that the total loss of all the 43 people was like $8 million. And that was not enough for the DA to take seriously. That was too low. So the civil judge didn't want to do anything till the criminal case resolved. And the criminal judge, the DA just never acted on it. So we were in this limbo. And the insurance company, I guess they look at what they think their cost of defense is, take a haircut off that. So bottom line, I got back 55% of my legal fees and zero of my investment. So it was an expensive lesson, but as one of my mentors said, well, at least you have your health, which sounds like a cold comfort, but it's true. I mean, a small tangent here. I got a surgeon I know who's done very well. He invented some instruments and he has a lot of money. And he was looking at one point at what kind of yacht to buy. And it was like $60 million, but he doesn't talk to his daughter. So which would you rather have?
Yeah, no, I hear you. And Mark, I think having health is a lot more beneficial and a lot more relevant, especially nowadays that, we're still in a state with the pandemic that's impacted the whole world. So I think health is something that you can never buy back with any sort of money. So absolutely having that health and staying healthy is the highest and the most important priority. And it was back then at 2009, and it still is now in 2021. So I completely agree with you. And it's a shame that it sounds like the guy more or less went unpunished because neither one of the courts wanted to take action. Did he ended up not being punished for what he's done?
Oh, I think it's just like OJ. I mean, if you can kill your ex-wife and a male companion and get away with it, you will. I mean, if you can commit crimes and be okay with it, I just think it's a different kind of person. I mean, I think most people, like if you're in line at the supermarket, the lady in front of you drops $5 and doesn't see it. Most people don't say, cool, I got $5. No, they say, excuse me, ma'am, you dropped this, right? Because personally, that $5 would like burn a hole in my pocket. What difference does it make? It's probably more money to her than to me. Not that I'm like Mr. Moneybags, but it's just not the right thing to do. And there's other people that are okay with doing those things. And so to sort of come around to the topic of this talk, or this conversation, I think I've tried to struggle with what are the lessons. Like, had I to do it over again, what are the red flags? What are the things that I should have done or could do? And I think maybe have a shorter fuse to follow up on things that don't make sense. Probably do a background check. I certainly know more about like choosing areas and what kind of properties I want to invest in, which are whole nother talks. But I think a large part of it is subjective, and it's like the go with your gut thing. And there's a lot of sponsors that say, work with people like, and trust. And no, well, no is part of trust. Like, who cares if they do a good job? It's trust. I mean, because like you could do all your due diligence. That's all on the front end. You write the check, the dog is off the leash. I mean, you got no control. And if you look at the PPMs, they're all written so that the general partners have all the control, which is kind of how it should be. I mean, if they had to get a vote, should we have egg or cream as the color for our new apartment rehabs? They'd never get anything done.
True.
But by the same token, by the letter of those PPMs, the memorandums, they literally could take their family to Australia and charge the building, But I think, that's why, if you go with people who have a lot of reputation, they live and die by their reputation. I mean, there's a sponsor that I'm with, and I got an email today. We have a new opportunity, and I kind of thought about it. I wasn't super excited. And then like 6 hours later, fully subscribed, right? So it's like, if you don't jump on it, it's done. And I have a lot of confidence in that guy. I've got several buildings with him, or I'm not buildings, but I'm teeny owner of several things. So, excuse me, some things you kind of have to jump on or whatever. But anyway.
But there's always next opportunity, and I'm sure if he's that successful, that sponsor, I'm sure there will be the next one that you can jump on. If you didn't feel that this was the right time or the right opportunity, then I absolutely agree with you. You shouldn't jump on it just because someone else has decided to jump ahead of you. That's totally fine.
But that's the currency. That's the currency for the sponsors, is they want to have, if they were putting people in deals and they were Ponzi schemes, they would have their business dry up, aside from having other legal issues.
Completely agree. And I bet if you met this sponsor you just mentioned in person, you wouldn't have the same impression as you had of the other guy. And you even said, I don't remember the exact words you said, but you said that it didn't sound like he looked healthy at the time. He was smoking, he was not giving you clear responses. uh, he may have been on something at the time when you met him in person.
Yeah, who knows? I mean, definitely, it's you're not a normal person to do that, and it's actually I shouldn't be proud of this, but it's not my first time being in this. There was when I was in college and residency, there was a guy that I met through some very rich people I know, and he was at their party, and at that time, I think this was like, I don't know, in the 80s sometime, and interest rates at the banks were like 3 or 4%, and he was offering 8%. And I thought, oh, that's good. And so his whole thing was he was accumulating money that he would get to other investors that could get 9 or something, and he got 1%. It all sounded very reasonable, and I just gave him the credibility because he was at my friend's party, and these guys are rich, the people I know. And turned out that I thought everything was fine, and then I get a letter from a lawyer. Do you know this guy? And he's a fraud or something like that. And we wound up getting back almost all of it from their insurance company, because there was he used the office of a major broker. It was like Deloitte, someone, or I don't know, some famous broker. And I did get recovery from that. But I guess the waves of amnesia go on, and like, okay, well, I stepped over that pile of poop, and so you just get on with your life, go back to believing people.
For sure. Another important point to keep in mind, and I think you kind of mentioned it along the lines, that this is investment money. This is not your day-to-day funds. This is not even your rainy day funds. This is money that you specifically allocate for investing. And when you're investing, whatever it is, Wall Street, real estate, gold, mining rights, everything can be completely lost. This is not FDIC insured, and that's what I keep reminding my investors and everyone else, that you have to remember that this is not something that's going to be guaranteed for you to receive back. Obviously, any reliable and strong sponsor would want to return not only the principal but also the interest that they promise based on their underwriting. But if it's a scammer like the guy you ran into, then he's gonna steal it and run away and say you with a straight face, "I'm sorry," or maybe not even say "I'm sorry." But the point is, if you're investing this money, you have to think that there is a possibility that all of it can be lost. And PPM has an extensive section about that fact that the money can be lost, and a lot of people just ignore reading private placement memorandum because it's too lengthy and they don't want to bother. But it specifically said that black and white that you may lose all your money, so be prepared to that. And that's how every legal document is structured.
Well, they also run on that FOMO, fear of missing out, right? And so you talk to these guys and you feel like, here's a chance to double my money in 5 years. And what can, I mean, to do that in the stock market, the rule of 72, what would that be? 10% or something, 12, I don't know, whatever it is, and that's hard to get in just equities, especially now. I mean, like, they kind of judge companies by the price equity or whatever, PE ratio. And they, normally it's been about 15. Now it's about 35. So, I mean, the stock prices have been bid way up. People are willing to pay a lot more for stocks. And I think it's going to fall to like so right today, if you had to find where to put some money and you thought it was with like that thing I missed out on today, which there'll be others, right? But I mean, if it was like, 6 or 7% cash on cash, and at the end of 5 years, you get back, 1.9 of what you put in or something, that's pretty good if it happens. It's
It
just,
is.
that's the whole thing. That's the risk if it happens, right? Who knows if they have a gang member move in or
Exactly.
something like that.
That's true. That's true. Well, Mark, this has been very, very helpful. Any parting words for our audience?
Don't do it. Oh, sorry. No, I think a lot of it is luck. I mean, when I wound up talking to about, I guess, 20 or 22 of this 43 investors, and a lot of them were saying, "What should we have done differently?" And it's the same thing. And I've thought of that example of like being in a restaurant. If a terrorist decides to blow it up, I mean, like, what could you possibly have done? The people on flights that go down, like, that's just the way it goes. Some people are going to win lottery and some people anti have that experience, or something like that. So I think what I've taken away is diversify. One of actually the guy that I almost invested with today, he makes the point, find a sponsor you really like and invest with them a lot. And with all due respect, because of what I've been through, I kind of have a different opinion, because it's like, if that one blows up, I got other things, you got dry powder in different places.
Yeah.
So I'm a bigger fan of that. So I guess it's really just to be aware that things can go bad. I think, I mean, I've, like, a friend of mine, they bought into this business. It was like something where you make pineapples covered with chocolate into flower arrangements or something, and I just thought, that's cute for like a minute, right? And I mean, what are you going to do with that? I mean, people trying to not have a lot of sugar, is that really a sustainable business? But they were so hot on it. Like, I wish you well, right? And so, everyone's going to go their own way. I just think, most people are not interested in advice unless they're asking for it. So I guess people who would listen to this might be looking for some wisdom or something, but just to keep in mind, things can go bad. And, if they don't, then it's a win.
Absolutely. Absolutely. And to your point, invest in N95s. Those will be needed for some time longer, probably.
Oh, yeah, there you go.
I'm joking. Yeah, but who knows how long we're going to need the masks for. Mark, this has been really great and very, very helpful. I truly appreciate your time and your feedback, and I'm sure our audience will appreciate that. So thank you so much. And until next time.